Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. I'm going to make this video a little different. I'm going to try to be a little bit more casual and less scripted. Let me know in the comments what you think. So the big news is that a couple of weeks ago, I sold one of my US investment properties. I sold the one at Woodland. I had purchased four in total starting in 2009, just after the financial crisis. I purchased the first one for 88, the second for 95. Both of those were in Phoenix. And then I bought another at 110 and 140, the latter two being in Las Vegas. And 2 weeks ago, I sold the one at Woodland. So perhaps you can learn a little bit from my experience or just an interesting piece of information. I'm going to tell you how the process went, what went well, what went poorly, and what the end result was. So firstly, why did I decide to sell the property? Well, in fact, I'm going to be selling one per year for the next 4 years. And the reason is that I'm making $20,000 to $30,000 US after tax profit every year. You can see that on the summary sheet. Some years are better than others. 2019 was particularly poor. Others are closer towards 30,000. The problem is that there is no leverage. All of the properties are paid off. They had to be paid off in order to purchase them. They wouldn't give foreigners a loan back in those days, and so I bought everything for cash. So those properties are making 2 to 3% off the current value or the return on the equity. It's a little bit better, about twice that, if you're looking at the original value or the cash on cash return or the return on investment. However, the alternative today is the return on equity. So I'm looking at 2 to 3% with a lot of administrative work compared to other possibilities, such as buying Canadian stocks and then getting preferentially taxed Canadian dividends. The other problem is there is no leverage, and that means these returns are really just the basic returns. But if there was leverage, if there was a mortgage, then the percentages would look a lot better. The cash obviously would still be the same. However, these properties likely wouldn't be cash flowing if I did have a mortgage, because 2 to 3% would barely cover the mortgage interest. Uh, and the other problem is that there is a lot of administration. There's a lot of managing the property managers. I can't travel because there's constant mail that I have to deal with, even though I could probably offload that onto the property managers. But I really want to be in the mix, because given the chance, they'll just do whatever they need to do, whatever's easiest, and they'll make me pay for it. And so I want to give my input or be able to veto things. Otherwise, it would cost me extra money. But if I get one or two letters a week, I have to deal with them, and therefore I can't really leave uh, the city, let alone the country. From a personal point of view, I have to admit I actually dislike this investment form, uh, partially because of the letters and partially because the passive investments require a whole bunch of active emails, phone calls, and so even though I originally wanted my portfolio to be about 50-50 real estate and stocks, I kept investing into stocks because not only that the real estate was a bit of a pain, but also you can invest in stocks with $5,000 while the real estate, especially later on, would be $200,000. And so it was just a little bit more difficult to get the money together. Now I can't complain too much because it has been good in terms of making money for me. The capital gains have been good. American dollars also pretty good. But here's the thing in that most of the quick gains have already happened. After the financial crisis and the crash, the real estate made a quick comeback, but now some markets have even softened, and now it's sort of going backwards and forwards a little bit. Also, Woodland had a bit of an issue with the air conditioning, where the coolant had to be flushed, and because the lease was up in the summer, it was just the one whose turn it was, and it was the first to go. Now, an interesting part in this transaction is that my realtor was the owner of the property management company who had been looking after the property the entire time that I've had it. So I selected him because, first of all, I was able to negotiate only a 5% commission rather than the usual 6 that seems to be the common thing in the US. And because I had wanted him to help me with the property disclosure forms and to be familiar with the property. Unfortunately, that didn't happen in the end. So I still ended up filling out the forms pretty much by myself, which wasn't ideal because I've never seen the property, and I would have preferred help from somebody who had actually been managing it. Now, what the realtor had told me is that real estate in Arizona works a little bit differently compared to what I've experienced in Vancouver, or what I had experienced when I purchased the property. So there's kind of two interesting tidbits. One is that there is an estimate, an assessment done of the property prior to the mortgage company giving out a mortgage. And so it doesn't really matter what price you agree on with the buyer if the estimate is far below that, then that is all that the bank will lend you. And so you would think that perhaps the buyer would be able to make up the difference, but the realtor said that that's not really what happens. So no matter what you negotiate, you basically have to come down to whatever the estimate is, or the buyer walks. And the second interesting thing was that the sales apparently seem to be very quick. I'm not sure whether just now or always, but apparently if a house doesn't sell within a week or two, nobody else goes to see it because they think that there's something wrong with it. And that's kind of when my cynical radar started perking up, because a realtor really just wants to do the deal as quickly as possible, and this was really an environment, or at least a mindset for the seller to help him get his commission as quickly and as painlessly as possible. So the house did end up selling within a few days. I think within 3 days, I had about 5 different offers. Uh, some of them were a little bit under the price that I was asking. The one that we ended up taking was a little bit over, and they also decided to ignore the estimate, and they passed on the inspection. So they really wanted the house, and it was a quick sale. The conflict of interest by the realtor always was sort of in the back of my mind, however, and I just think that they do want the fastest sale, and they just want the bulk of the commission, but they don't want to spend a couple of weeks and a bunch of work to get me a couple of thousand just to get themselves $100. So that conflict of interest, I think, was playing in here. The realtor said that ultimately it's my decision, but of course I have to go by their advice. I'm not familiar with how things work, and despite all the Googling, it was really difficult to confirm or deny some of the things that were apparently going on. But yeah, the house did sell over asking, but I think the real estate market was sort of ramping up at that time as well. So I think that was fairly common. So as I had mentioned, the buyer did decide to waive inspection or anything else, and they said they would ignore the assessment. So apparently I happened upon that one rare buyer that was willing to make up the difference. And after a little bit of negotiation, we were able to arrive at 276. The asking, of course, was 275. Before the buyer would remove the subjects, I had to fill out a disclosure form. I had been bugging the realtor 3 days before the deadline to get me somebody who was familiar with the property to help me fill out the disclosures form. The night before the disclosures were due, I got his admin person who really didn't know anything about the property specifically. I would have preferred a property manager who had been dealing with that property, but that was not to be. The admin person was helpful in that she knew uh, the the area. She knew where the airports were and could tell me whether there was going to be airport noise near the house. She could tell me the gas company, the electric company names, and so on that I would have spent 30 minutes googling just to find out those items because I just wasn't familiar. But I really didn't get the service that I had been hoping for and why I got this specific realtor. Prior to closing on the property, the seller has to fill out this 22-page form. That's basically the sales form, but there's a lot of tax information in there. And in the US, they have something called a FERPTA withholding, where they can charge you up to 3% of the property value in a tax. And the realtor had told me, "Oh, we're gonna make sure that you don't pay that 3% tax." And basically, as long as the property is under 300,000, and please check with your accountant, you shouldn't have that withholding. However, when I was actually trying to fill out the form, I tried talking to the realtor, and he also directed me to my accountant. So despite all of the promises, in the end, really the only thing that he did was make sure that the price was under 300,000. So again, the service probably wasn't what I was hoping for. I don't think that there's any withholding because I already got all of the cash, but it was just a little disappointing. Now, one thing that I do have to point out is that for wiring the money just across one border is an amazing chore. So those of you who know me know that I'm a business analyst, and so I look at business processes and I look at vocabulary to make sure that one department in a company can speak to another. But just what I saw here, despite the number of transactions that have to occur on a daily basis, was just amazing. The fields were different, differently named. Sometimes you took a part of a field in one country, and then it became you put it together with another field, and that became an entire field in the other country. Sometimes you put information just into comments and description fields. So I think there has to be somebody who's looking at all of these transactions. So it was multiple phone calls to my bank. It was multiple phone calls with the title company that was handling the transfer in the US. Yes, the money did come across, but I was sweating it. I was completely pleasantly surprised that it actually did drop into my account. So, not to pile on too much with the realtor, yes, he did get only 5% commission, but really the service with this realtor, and I'm afraid with other realtors that I've previously interacted with, hasn't been the greatest. This realtor I also noticed was really only available when he needed me to sign something. But when I needed him, whether to provide information or to provide a resource, emails went unheeded, phone calls, texts. But when he needed me to sign a contract, he was available in the evenings and everything like that. So it was quite an interesting change depending on what the motivation was. So in the end, the property sold for 276 after adjustments, commissions, property tax adjustments, and so on. As you can see, it was a lot closer towards 256. Still, I had been valuing that property at 250 in my Quicken tracking software, and that 250 that I was valuing it at was in Canadian. So the fact that I got 256 US means that I was still up. The other issue I had was with the title company. They had significant problems filling out the forms correctly. So initially they had the sales forms at 275 selling price. Then they corrected it after I told them, but they didn't correct it everywhere. I had to fight tooth and nail to get them to allow me to sign the documents electronically. Like my realtor had to intervene, otherwise I wouldn't have signed them. Like they wanted me to print out and sign them physically, and I don't have an easy access to a printer, so I wanted to do it via DocuSign. That took them a while. So it was a good thing that I had been pushing to get that process started early. If we tried to do it the night before, it would have been a disaster and we would have missed the deadline. However, the DocuSign didn't get emailed to me because they had the wrong email address. I have a yahoo.ca account, and they were sending it, I'm sure, to the .com. So some of the details that you would expect in somebody who's doing this administrative work, uh, just the attention wasn't there to those details, and it was a lot of back and forth and a lot of emails, which I didn't think had to happen. So the experience wasn't great with the title company either. Of course, not to be outdone, there was a problem with the buyer as well. So there was a hurricane that hit the eastern seaboard, and so there was some problems with the banks, and the buyer couldn't get the money on time. So the sale was supposed to close on a Monday, so I thought I would have my money maybe Monday, at worst on Tuesday. The hurricane delayed things by, I think, a day and a half, and then of course the wiring took 2 days, so I ended up getting the money on a Friday. The fact that it arrived by the wire transfer was a pleasant surprise, but it did arrive. Now, the timing of the money arriving was quite important to me because the Canadian dollar kept on getting stronger during this entire time. And so when I was getting US dollars, I would end up getting less for them because of the Canadian dollar getting stronger. So I was really pushing and pushing to get this closed and to get my money as quickly as possible. The real estate market as well kept on going up. So as I was getting comparables online, I could see that if I had held out maybe a little bit longer, that I could have gotten more money for the house, maybe 1,000 more, maybe 2,000 more. But you know, hindsight's 2020, and there was no way to tell that that was going to happen. It could have gone down as well. So what did I do with $250,000 US dollars? Well, I didn't travel around the world. I didn't buy myself a Lamborghini. I bought myself $51,000 worth of US stocks in US dollars, since I had all these US dollars. And I used Norbit's Gambit. Please see the video that I did previously. The links to the video are in the description. In order to convert the US dollars into Canadian dollars. As I mentioned in that Norbit's Gambit video, I had to make multiple phone calls to Qtrade to actually get the money released. So now that I had Canadian dollars, I paid off a home equity line of credit and an unsecured Bank of Nova Scotia line of credit that I got in March when the stocks were down, and I used $170,000 to buy a whole bunch of stocks. With the money that was still left over in Canadian dollars, I bought $41,000 worth of Canadian stocks. At the advice of my accountant, I also purchased 20,000 worth of RSPs to offset the capital gains taxes, and I got myself a $40,000 emergency fund, which I think is slowly going to dribble into various stocks as the opportunities present themselves. But right now, I have an emergency fund. And I am also aware that in April of 2021, I will have $30,000 worth of extra taxes that I'm going to have to pay despite those RSPs that I purchased. So, even though it sounds like perhaps from what I've been saying that there were a lot of negatives to the process, the positive is that I was able to sell the house, pay off the lines of credit, and I now have less administrative work to do. So I am following the plan that I had set up for myself. And because I got a whole bunch of money in US dollars and I had the house valued in Canadian dollars, my net worth actually ended up going up. So I was quite happy about that. The fact that I'm going to be getting 25% less letters and less problems to deal with, uh, plus less risk of liabilities from a renter hurting themselves on my property and suing me. I'm quite happy with the end result, and of course, the money almost tripled. So I certainly can't complain there. So if you have any requests about what you would like me to cover more in the future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.